Welcome back to Lucid Equity. One money topic, made simple. Today, the biggest shift for the dollar in 50 years and what it means for gold, silver, and Bitcoin. Right now, the US dollar is going through one of the biggest changes it has seen in about a century. It is quiet, it is slow, and almost nobody is explaining what it really means for your money. By the end of this video, you will understand it better than most investors on Wall Street. Here is the strange part. When people fear the dollar, they normally rush into three things: gold, silver, and Bitcoin. But recently, all three fell hard at the exact same time. So are those investments suddenly broken? Or is something much bigger happening underneath? Stay with me, because the answer flips the whole story. Quick pause. If this is already making the news make sense, do me one small favor. Tap like, hit subscribe, and ring the bell. It takes 2 seconds, it is completely free, and it genuinely helps this channel reach more people. Now, back to the dollar. First, the basics in plain English. The dollar is the world's reserve currency. That simply means it is the most trusted money on the entire planet. When countries buy oil or trade with each other, they mostly do it in dollars, not in their own money, in ours. And here is what is wild. A $100 bill costs less than a dime to print. It is just a piece of paper. It is not backed by gold sitting in a vault. Its real power comes from one thing and one thing only. People around the world believe it has value, and they use it every single day. That belief is the whole game. So why are people suddenly worried about that belief? It comes down to three forces, all pushing against the dollar at the same time. Let's walk through them one by one. Force 1. Countries are slowly moving away from the dollar. 25 years ago, the dollar made up about 72% of the world's savings. Today, it is around 57%. It is still number one by a mile, but the trend is clearly downward. China, in particular, has been quietly selling dollars for years. Force 2. Inflation. When prices rise, each dollar in your pocket buys a little less. Inflation is now running around 3.4%. It is cooling off, which is good news, but it's still higher than the Federal Reserve wants, and every year it slowly chips away at the dollar's value. Force 3. Energy. A conflict with Iran sent oil prices spiking earlier this year. And hey, oil is dangerous because it raises fears about the entire economy. When people worry at the economy, it's apt to worry at the dollar too. Three forces, all at once. Now, when people fear the dollar, where do they run? Into gold, silver, and Bitcoin. These three are known as the debasement trade. The idea is beautifully simple. When the dollar goes down, these are supposed to go up. They are the escape hatch. So here is the puzzle. We have all three fears hitting at the same time. Gold, silver, and Bitcoin should be flying to the moon. Instead, they dropped. All three of them. That is the exact moment most people panic and sell. But watch what is really going on. Here is the truth, the headlines skip. This was not a crash. It was a pullback from record highs. Gold hit nearly $5,600 in January, an all-time record, then eased back to around $4,400. Bitcoin fell about 28%, but from its highest price ever. These are big drops, yes, but they came from the very top of a massive multi-year run. So that raises the real question. If the dollar is under so much pressure, why did these safe havens pull back at all? It comes down to one single change, one decision that quietly flipped the entire market. Let me show you exactly what it was. This year, the Federal Reserve, the most powerful bank in the world, got a brand new leader. Jerome Powell's term as chairman ended, and President Trump appointed his replacement, a man named Kevin Warsh. And almost immediately, Warsh changed the message completely. For 2 years, investors had assumed the same thing, that the Fed would cut interest rates and print more money. That assumption is what pushed gold and Bitcoin so high. But Warsh said the opposite. He signaled the Fed might not cut at all. It might even raise rates to defend the dollar, and it would stop telling markets what was coming next. That was a genuine shock, because a stronger dollar and higher interest rates are the two things gold, silver, and Bitcoin fear most. In one move, the debasement trade lost all of its fuel, and that is why they fell. But there is an even deeper reason, and this is the part most beginners miss. Gold and Bitcoin pay you nothing. They just sit there hoping to rise in price. But when interest rates go up, your plain, boring cash can finally earn a real return. And that quietly changes everything. Let me make it real. $10,000 in a high-yield savings account might earn you over $400 a year, safely. That same $10,000 sitting in gold earns you exactly zero while you wait. That gap has a name. It is called opportunity cost. And right now, it is working against gold for the first time in years. But now, watch this twist, because it is fascinating. Even with prices falling, the world's central banks are still buying gold at a record pace. Last quarter, they bought more gold than almost any quarter in history, led by Poland and China. The countries themselves are loading up. So think about what that tells you. Everyday traders are nervous and selling, but entire nations are quietly protecting their savings with gold. De-dollarization, the slow move away from the dollar, is very real, but it is a slow, steady drift, not a sudden collapse. And understanding that difference is everything. Now here is the part that truly makes you a smarter investor. Because gold does not always go up. I know that sounds obvious, but most people forget it. Let's look at the last 17 years, and a very clear pattern appears. Back in 2008, the economy crashed. The money printers roared to life. Fear of the dollar exploded, and in response, gold soared for 4 straight years. If you only watched that period, you would think gold only ever goes up. But then, in 2012, something shifted. People realized the economy would survive after all. The fear faded away, and gold fell, and then stayed flat, all the way until 2020. That is 8 long, quiet years of going nowhere. Then the pandemic hit in 2020. Money printing came roaring back. Interest rates were slashed to zero, fear returned, and gold boomed all over again. And now, in 2026, we are simply watching the next natural pullback in that very same cycle. So that is the real lesson, and it is a powerful one. Gold, silver, and Bitcoin move in cycles. They rise when people fear the dollar, and they cool off when the dollar looks strong. They are not broken. They are just breathing in and breathing out. So what does all of this actually mean for you and your money? Let's turn this whole story into 4 simple, practical moves you can use today. Move 1. Your cash. While interest rates are high, put your savings to work in a high-yield account, or a CD. For the first time in years, safe, boring money actually pays you a real return. Do not leave it sitting in an account earning nothing. Move 2. Your debt. A stronger dollar and higher rates make expensive debt hurt even more. So attack anything above roughly 8% interest, like credit cards, before you chase any shiny investment. Paying off 8% debt is a guaranteed 8% return. Move 3. You're investing. Do not buy gold or Bitcoin hoping for a quick flip in 6 months. That is gambling, not investing. Own a small amount as long-term insurance if you truly believe in it. And always think in decades, not in months. Which brings us to the honest verdict. Is the dollar collapsing? No, not even close. But it's absolutely changing. The era of near-zero interest rates is over. And for now, cash is king again. The smartest investors are not panicking, and they are not chasing headlines. They are watching the dollar and thinking long-term. One last thing, and it matters. This video is education, not financial advice. Every prediction here is a scenario, not a promise, and markets can change fast. So always do your own research. Never blindly trust a voice on the internet and invest for the long run. If this helped, share it with one person who needs it. Thanks for watching Lucid Equity.